When we look ahead to 2026, there are really only three possible economic paths. Growth accelerates, growth slows, or we land somewhere in between. Some parts of the economy are always stronger than others. The real question is whether those stronger areas can lift the weaker ones, or whether weaker sectors end up dragging everything else down. Take consumer spending as an example. Higher income households are still spending at a healthy pace. Wage earners, not so much. One reason upper income growth has held up is the potential productivity boost coming from artificial intelligence. If that productivity dividend really shows up in 2026, it could expand spending power more broadly. That, in turn, could support manufacturing, construction, and even trade, helping keep GDP growth above 2% and possibly easing inflation pressures. On the other hand, if productivity gains from AI are slower or harder to realize, income growth at the top could cool off. That would likely pull down overall consumer spending and cause economic growth to slow significantly. It's also worth remembering that U.S. households now have more money invested in stocks than in their homes. That shift could mean more volatility in financial markets if confidence starts to wobble. Even so, the U.S. continues to outperform most other major economies. But if growth slows here, the effects won't stay contained. Slower economic growth could ripple through the global economic system, adding further downward pressure at home. At the same time, the U.S. is imposing tariffs while China is lowering export prices, which can create additional stress in financial markets. That kind of environment can weaken not only other investor income, but investor confidence, and anxiety tends to feed on itself. So where does that leave us? Will the economy be too hot or too cold? The odds point to something closer to the middle. The only real certainty is that the path forward will likely be messy, uneven, and uncomfortable at times, a muddle rather than a straight line in either direction. If you want to talk through how these dynamics may affect your portfolio, your retirement plans, or your broader financial strategy, you can learn more and schedule a conversation at larreawealth.com.